Hi there, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 3rd of April. All right, now, what I've been focusing on all week is the employment numbers. Right now, the weekly jobless claims numbers came out with a big blowout, 6.648 million. You know, and I actually was probably expecting that to be a bit higher. I know the expectations was 3.5. I don't know where these polls are coming from, but you got to think from here on in, this is going to get a lot more exponential. Okay, there was layoffs initially. They've been processed. I think from here, you should see that blow out to about 50 million at least, if not even higher. So what does that do for us? Well, it brings back in the whole more, the Fed need to do more easing, more stimulus, right? So that is even pushing interest rates lower, you know, through that quantitative easing. That's the expectations. Equities rally, okay, and the dollar pairs rally. And that's what we're seeing across the board. Now, I've been highlighting this all week. You've got to be ready for how this all works. And one of the key things, obviously, looking at today's trading is we get the big juicy number, the non-farm payrolls, right? So this is where it's going to get really interesting. Reuters poll, I mean, I'm sure these polls must have been updated. Non-farm payrolls changed minus 100,000. You got to be kidding me. This is going to be a huge. They got the minimum range is minus 4 million. I think it's got to be above minus 4 million at least. I know this is the first payrolls. So those weekly jobless numbers are processed each week, right? This is last month, so it may not be as bad as that, but the next non-farm payrolls will be. So that's what we're preparing for and see what the Fed have to do. I mean, this is going to be a huge social number in the sense that if employment goes like epic, like a depression, then that's going to impact like everything. Consumer sentiment is already at record lows. So you put this on top, everyone's going to get super depressed and the markets will react accordingly. So what does that do for us? Now, this is the big number that we're waiting for, right? So the non-farm payrolls. What you can do is, you know, go through some sort of scenario analysis and try and work out where the best opportunities are going to be. To me, if it's a big negative number, I think we see the dollar rally. So with that, I would expect, you know, Aussie to fall, Kiwi to fall, Euro to continue to fall, and Sterling, even though it's just chewing away sideways, we've got a nice support trend line here. We should see it fall, and dollar yen back rallying. Dollar CAD should rally. Oil's just popped up $5, which was either oil was going to come back into play or dollar CAD. It looks like oil's come back into vogue. So, but we should see dollar CAD rally there as well on really weak numbers. Okay, minus 4 million plus. If the numbers aren't so bad, well, we're just going to get the reverse scenario. And the market is factored in now for bad numbers. So almost on the off chance that we do get a number that's, you know, this is a very rare opportunity. Like we get numbers that aren't so bad, well, then you're going to see all these currencies pop. Now, the chance of that to me is exceptionally slim. But don't rule it out, right? Okay, I think there's probably about a 1% chance of that, but that's where we are right now. Just take a look at the news now. This is what you need to be aware of. There's no real new news. So what the news services will do is just rehash the same sort of crap. Dollar gains for second day, US non-farm payrolls loom. Of course, that's the big scenario. Then you'll get your various bits of coronavirus news all over the place. And there's nothing new about that. So when you do come back to look at the, if I just bring you back to the main page here, have a look at the risk on, risk off scenario. Just having a look here where the markets are rolling around with the movements in the equity markets. Okay, you've got to keep abreast of this. Obviously, US equities up. That's going to be, there's been a lot of negative sentiment in the market. So I think we should see Japanese equities rally, and also European equities should rally off the back of those US markets. Okay, barring any fresh news out of out of Asia with regarding the whole virus issue. The risk on, risk off pairs, the yen crosses, well, not a lot of activity, and I don't expect a lot ahead of the non-farm payrolls. Right, this is the big number. As I said, markets and fund managers will be looking at these numbers to gauge whether the Fed has to do more stimulus or come up with some more creative solutions, or if the numbers aren't so bad, which I think at this early stage is impossible. They've got to be worse. If they aren't so bad, then, we see the US dollar fall. But it's the writing's on the wall. At this stage, I don't see any risk on, risk off scenarios in play. It will be after the non-farm payrolls. That's where it may come into play. Just having a look at the daily trade routine here, market conditions. Well, to me, as far as the majors are trading nicely, okay, technically very well. The market driver, no change there. We won't see any changes there for a while. The active pairs, well, oil's back in the game here. Keep an eye on this. I mean, it has been heading lower, but we may see a pop to the top side as it comes back. And it's sort of just messing around with that level at the moment. But to me, the main thing is understanding that the rest of the major pairs are in play. They're all in place today with the non-farm payrolls. Look, like to me, I'm sort of basing myself around really weak US numbers. Okay, dollar strength. So with that, I'm looking to get into potential trade. Now, dollar yen's already above the support line, and resistance is 111.87. So this is really no good to me. I don't really have a clear entry level except for when the data is released. If that goes up, and I'm expecting, say, Aussie to go down, unfortunately, we're missing the secret ingredient, which is the key entry level on a technical basis. Same for the Kiwi. Dollar CAD top side, well, that's a lot higher. We do have, when you're isolating these pairs, a couple of levels. Now, the pairs that stick out to me where we do have opportunities is sterling on a really weak US numbers. We've got a support line at 122.73. Dollar Swiss top side, we've got a close resistance level there at 97.53 as well. To me, they are the two pairs that I'll be looking at more or closer because they make sense. Now, that's a weak US dollar outcome, weak non-farm payrolls. On the opposite side, okay, we do have some levels here. If we start to see dollar weakness, I'm looking for support levels to get short and obviously levels on the top side to get or to go short-term long. And we've got a number of these to work with. Probably euros probably too far away. Potentially a sell on the downside. So this is how you should be looking at your pairs, right? Look at what happens if this happens and the vice versa scenario. So that's where we are, guys. It's, as I said, non-farm payrolls. It's the big, hairy number of the market. It will give us a real good look at the US employment situation. It may be too early yet for the data to hit, but we'll find out very shortly, and we'll go from there. All right, guys, have a good one. Cheerio.